Can you guys just let me know if my voice audible so you can start with the session? Okay, so we'll be starting with the session. So today the topic for the day is derivative trading opportunities in live market. And before starting with the session, we'll just touch upon few things that we'll be discussing in today's session. That is the Nifty Bank Nifty setup, option chain analysis for Nifty Bank Nifty, option strategies as per the scenario, budget strategy, and then followed by conclusion. So if everyone has been witnessing and tracking the market, so the market has been quite trending like from in past 2 to 3 months. Nifty in the November 2020 from 11,500 it moved up to 14,750, and now ahead of the budget, that is the in the next week, volatility has already started. So Nifty has corrected good 300, 400 points from high levels, and Bank Nifty is relatively underperforming. And going forward, also the volatile move is likely to continue because ahead of budget, the VIX is also going to rise, and likewise. So the topics that we'll be covering would be for the today's session will be Nifty Bank Nifty setup, followed by option chain analysis for the Nifty and Bank Nifty. Then what are the different strategies that we can play as per the setup for the option writers or for the option buyers, and even people can go through with different strategies as volatile moves likely to continue. Then the very key important, that is the budget strategy, that will be advising to the clients to hold it against their portfolio and in a way to hedge it if any uncertainty comes over the budget outcome, post outcome, and then followed by conclusion. So now looking at the first, we'll be talking about the index setup. Now currently Nifty and Bank Nifty. So if you see the Nifty overall trend, it has been strongly bullish, and market has been moving, inching higher month on month basis. In past 3 months, Nifty rally around more than 3,000 points from 11,500 to 14,500, 14,750 levels. And now it has witnessed some profit booking from higher levels at 14,700. Now it is trading around as 14,300 levels. So if you see, all in all, market has been quite positive and different sectors has outperformed. Whereas, so if you see going forward, Nifty is currently trading around 14,300, 350 levels, and immediate support seems to be 14,200, then 14,100 levels, while on the upside, resistance at 14,500, then 14,600 levels. So, however, these levels could be from a within the 2 or 3 days perspective, and as budget is there on the 1st of Feb, that is on the next week, so volatility is likely to be seen overall. And even if you see as per the option data also, so as per the option premium, we can expect a move of 3% or 4% upside or downside on either side. So volatility is likely to rise, and traders can take the advantage of it by hedging it also and try to play volatility with different option strategies. So moving on to the next thing, that is the option chain of the Bank Nifty. This is the monthly expiry, that is 28th January 2021, and looking forward as per the option activities, that is call concentration and put concentration. There's a different strikes, there has been option writing activities. So immediate support is Nifty is 14,250, then 14,100 levels, while resistance seem to be 14,500. So 14,500 is likely to be a key level going forward also. So today also market open gap up, it went up to 14,500 levels, and from there it witnessed some profit booking from high levels, and around 14,350, 14,300 it went. So 14,500 level is a crucial level. However, till the time it sustains below 14,500 levels, the setup would be likely to be on sell on rise. Whereas for the Bank Nifty, major level is 31,600. So for Bank Nifty, 31,600 is a major level. Till the time Bank Nifty sustains below 31,600, it can fell down to 31,000. But however, it has major support near 30,800 as well. So from the Nifty perspective, maximum call concentration is at 15,000, then followed by 14,600 strike for the January monthly series. Whereas on the put concentration, that is the maximum put concentration, maximum put is at 14,000, then 13,800 strike. So all in all, if you see as per the option data, 13,800, 13,800, 900, 14,000 to 14,600 is likely to be the range for the coming expiry week, that is till end of the January, 28th Jan. Call writing. So if you see, there's a call writing activities at 14,500, then 14,600 strike, whereas put writing activities seen at 14,000, then 14,400 strike. So writing is also seen at 14,000, whereas put concentration is 14,000. So 14,000 is likely to be a very key major level for the market, whereas on the upside 14,600 is likely to be a key level as per the option data also, and as per the technical level also 14,600 likely to be a key level. So all in all, for immediate range could be 14,200 to 14,600, 14,700 zone. However, due to higher VIX, as the volatility is likely to increase, volatility is also likely to be higher going forward. And within the range, the market can go up and down, but overall the structure remains, the bigger structure remains positive. However, ahead of budget, the volatility is likely to be seen. Now talking about the Bank Nifty structure, that is, if you see the blue trend line, so that is the immediate support for the Bank Nifty, that is around 31,000 levels. So it made a high of around 32,800 levels in the last week, and from there it corrected good decent 600 to 1700 points from higher zones, and now it has come near 31,000 levels. So overall, if you see Bank Nifty, the structure has been relatively underperforming. So Nifty all-time high was around 12,430, whereas it has already moved higher from that levels to 14,700 levels, whereas Bank Nifty has just touches all-time high in the last week. So overall, the Bank Nifty has relatively underperformed the Nifty if you compare from a year's perspective. However, major banks that are contributing for the Bank Nifty is the HFC, ICICI, Axis, and Kotak, which have been the major runners for the Bank Nifty movement. All in all, now if you see on the setup wise, Bank Nifty is trading around 31,500. And the immediate support is likely to be 31,000, then 30,750. Whereas on the upside, 31,600 is a key level, then 32,000 zones. So as generally Bank Nifty is relatively volatile also, and it's generally high beta. So movement of 3 to 4 counters can make a big move in Bank Nifty on either side. So likewise, it's very important to understand and play the range accordingly. Whereas generally Nifty is relatively low beta as compared to Bank Nifty. So as per the option data for the Bank Nifty as well as Bank Nifty is currently trading around the 31,400, 31,500 levels. And as per the option data, this is the new option chain introduced by the NSE. So Bank Nifty support is at 31,000, 30,750. Then major is at 30,500 levels, whereas resistance is at 31,750, then 32,000. So how for Nifty 14,500 is a key level. Bank Nifty 31,600 is also a very crucial level that will decide the tone for the market going ahead. Till the time it doesn't surpass 31,600, the selling could be there at higher levels, but buying also around 31,000 is a very crucial level for Bank Nifty. So we also need to watch and see how it plays out. In terms of option data, that is the option writing activities, Bank Nifty call concentration maximum is at 32,000, then 32,500 strike, whereas maximum put concentration is at 30,000, then 30,500 strike. Generally, option writers likely to keep a wider range in Bank Nifty because Bank Nifty is generally highly volatile, and 400 to 500 movements in Bank Nifty can happen quite swiftly. But however, if you see the option data, so 30,500 likely to be an important level, whereas on the upside, 32,000 is likely to be a key level because the call writers activities are also quite heavy at that strike. Along with that, if you going forward, if you just check call writing activities, so 32,000 writing is happening at 30,000 strike, then 31,500. Whereas put writing activity is seen at 30,500, then 31,200. So the range is quite wider because the volatility is likely to be higher. So as for the option band, the data setup that looks like the range could be 30,500 to 32,000. And it's very important as the result season is also going on. Today we have a result on Kotak Bank. Then in the coming week, the results followed by Axis Bank, ICICI Bank. So the stock specific action is likely to be seen. Along with that, intraday volatility is likely to be high in Bank Nifty. So it's very important to see where does the Bank Nifty try to hold around, and also see what will the outcome of Kotak Bank result today. So definitely it would have an impact on the Bank Nifty overall. So from the option data perspective, 30,500 to 32,000 is likely to be a very key range for the market. Now going forward, we have discussed about the Nifty and Bank Nifty setup and the key levels. However, this is the important thing that we need to keep in mind is that is volatility, India VIX. So if you see this chart, so in the year 2020, that is last in the March series, in the extreme left, if you see, so the VIX has increased tremendously from lower levels to high levels. Around from 20 it move up to around 85 90 levels, and then from there on week basis, on daily basis, the VIX is starting falling down. Likewise, market has also made a base around 7,500 8,000 bottom in the last year, and now slowly gradually it has moved way higher to all the more towards 14,000 for 500 zones. So from past couple of months, VIX is trading in a band between 16 to 24 25 levels. And generally, VIX is an indicator that has an inverse correlation with the market. That is generally when VIX is higher, so there is an uncertainty, there is a fear factor, and market tends to move down. However, if apart from that also, whenever there is a key event such as budget or US elections or Indian elections or any uncertainty on India-Pak border or any political or economical uncertainty there, VIX generally tends to get higher. And generally, whenever there's a big event, so coming week budget is a very key event and everyone is looking forward for that event. So VIX is generally likely to be inching higher from going forward, and that will definitely capture the uncertainty. So it's very important to capture the VIX. But overall, if you see the bigger trend of the VIX, it has been stuck in a range. So we expect the VIX is likely to rise, but overall bigger trend, if you see, the VIX is overall consolidating back, so that gives the support to the bulls that overall the bigger trend is positive. However, as market has sharply run up in past couple of months, so little bit volatility and little bit dips from high levels is quite possible, and that is likely to be as a buying opportunity for the long-term investors, and along with that can buy good companies at low levels. So ahead of budget, VIX is likely to spike, and that could be played through different strategies that we'll be discussing going ahead in the session. So different strategies are available. So continuing ahead with this, just wanted to confirm. Okay, great. So voice is clearly audible. So now if you see, generally what happens, a lot of people are there who wanted to play through strategies and option strategies, but they don't know what exactly and how exactly they need to play the different strategies. And it's very important that while suggesting or while implementing or executing any option strategies, it is important to have a time frame in mind, what is the price target and what is the direction for it. So if you see which strategy to use, so as the benefit of option strategy is that we can play in any market sentiment, that is the positive side or on the negative side or the volatile side or a range bound side. So this is the best part about option strategies, that all the four scenarios we can play through. Generally, apart from that, when we have to buy or sell, so there are only two things possible, whether you can buy it or whether sell it, and you cannot take the benefit of both the movement. However, the best part about the option strategy is that we can take the movement of both the sides, and that would be the key thing for to initiate the strategy. So while identifying, it's very important first we identify the market. So I'll be discussing more about the detailing about what strategy to use, when to use, and for how much time it to use. So while executing any strategy, is very important we see which strategy we are executing. So first we need to understand what is the direction of the market, whether we are positive on the market or whether we are negative on the market, whether we have new range bound in the market or whether we are expecting a volatile move on either side. Along with that, what is the price target? So for example, someone asks or someone says that I'm expecting Nifty to go towards 15,000. But someone didn't mention in how much time, whether it's 1 day, whether it's 1 week, whether it's 1 month, or whether it's 2 months. So along with that is also understand whatever price target you have framed. It's very important how much time. So because options and option strategy is all about the premium and the time factor and how much time or how much premium you're ready to pay to play a specific move. So as per that setup only, the thing is important. So the first thing is the strategy, identify the direction, whether the positive, negative, neutral, or range bound. Followed by what is the price target expecting? That you're expecting Nifty to move by 100 points, or Nifty to move by 200 points, or Nifty to move by 500 points. And the time frame, whether you're executing the strategy for 2 days, or for 1 day, or for a 1 week time, or for a monthly time frame. So as per the different market setup and as per the different time frame, we need to keep upon choosing different strategies, and accordingly we can set up different strategies. So first thing is done, that is the direction, what it is. Second, followed by the strike. So it is very important. Generally, what we have seen in the past also, people say, I have bought this strategy, I have bought this option, but it is not moving or I'm not making money from it. So very important to keep the strike, which strike you're executing. So as in under options market, there are basically two things. That is the option buyers perspective and option sellers perspective. And as per that, generally that makes the deep difference between it. So while you are an option buyer, what you have to do, whereas while you are option seller, what you have to do. So if you see in the slide also it's mentioned, avoid deep out of the money option until you are expecting sharp movement in that direction. So generally what happens when the option buyer, so he is trying to catch the momentum in the market and try to benefit from the movement. So for example, Nifty is trading around as 14,350 or 14,400 levels, and it is expected, they are expecting the market to move higher or market to move lower. So if it is expecting the market is likely to be in momentum, and the option buyer buys a put option, for example 14,350, so 14,400 Nifty is trading and he buys a put option of 14,300 level. So if the Nifty corrects by 50 points, the option will also increase by 15 to 20 points. However, he has bought the at the money or slightly at out of the money strike for option buying. If instead of 14,300, the option buyer have bought the strike for 14,000, so the movement has to be very quick. Unless and until the movement is not much, so the buying perspective, the option buyer will not make money. On the contrary, this is from the option buyer perspective, whereas for the option seller, so option seller role is what? It's to gauge the market and to take the benefit of the time decay. So it's very important for the option seller to set such strikes in out of or motion that that sells the range. So it is advisable for option buying. It's they buy at the money or slightly out of the money strike. Whereas for option selling, it is advisable to sell deep out of the money call and put option. For option selling also, it's very important. We have to see a number of things into considerations. First and foremost, whether the market is too volatile or no. If the market is too volatile, we generally avoid suggesting option tracking activities because the premium might shoot up or might decline. However, at the same time, if the market is stuck in a range, so we definitely suggest option tracking activities so they can take benefit from the time decay. However, along with that, what is important for the seller perspective is we also have to see volatility. So as if ahead of the budget, the volatility is likely to increase and the movement is going to be quite swift. So we generally tend to see for the option writers when the volatility is high, it's better to keep positions light or reduce for option writing perspective and keep positions hedged. So any point of time. So there was an instance last year, it's last month itself, that is 21st December 2020. Nifty corrected more than 400 points on intraday basis, and VIX also shoot up, and the premium increased by 7 to 8 times. So the put increases from 14,000 15 20 levels to 70 80. So it's very important that whenever we're doing option writing activities, we have to see the certain factors such as not any other major event. Markets tend to move in a range, and also need to see what is the beta nil. So generally we suggest option writing activities more in Nifty as compared to Bank Nifty, because Nifty the movement relatively is lower and it's less volatile as compared to Bank Nifty. However, for the option buying perspective, we also suggest to go in Bank Nifty because the movement is fast. For option buying, what is important is the momentum, whereas option selling, we expect that the market should be in a range. So that would definitely help the market for the player to take the benefit of the situation. And under option strategy, what the best part is, you can be option buyer or you can option seller, and along with that you can be also an option strategist. So instead of naked buying or naked selling, you can get into different spreads or different strategies that will be helpful for you to take the benefit of the move on the either side. So starting with the series strategy for short-term option trader. So whenever there are like intervals throughout the month, so whenever there's a beginning of the series where the option premium is high, we generally tend to suggest for the option players to get into spreads. So when the scenario, when a client or when a trader or short-term trader is expecting market to move higher, so he can get into a bull call spread or covered call or long call. So why? Because at the premium of the at the start of the month, the time factor is a maximum and the premiums are high. So instead of just going for naked buying or naked selling, they can get into spreads in which they can get the benefit also of the move also, and the risk is also low. So in market, what we have generally realized, what is important is the risk factor. If the risk is, we have to very important to manage the risk. And in derivatives, it is all about the risk management, how well you can manage the risk. If there are no, if you're not able to manage risk, so the profits also that you have earned will not able to sustain. So the risk management, the best part about the option strategy is like the risk is limited, although the reward is also limited, but there is a higher probability that you can make money through option strategies, especially when the market is volatile and at the beginning of the series. On the contrary, if we expect that market is likely to go down or we have a negative view on the market, so we can get into bear put spreads or covered put or short column. So as per the risk appetite of the trader and as per the view, he can get into a situation, and at the start of the series, it's better to go with spreads. Whereas the third thing is range bound. So this is a very general setup, the range bound thing. So if you see as per the historical data, though, market generally moves in a range. So out of 12 months, market is generally 4 to 5 months 20, and rest of the months is generally stuck in a broader range. Except the last year, post COVID, so that was a completely different setup that market has witnessed. But generally, out of 12 months, market tends to move in a range of 7 to 8 months, whereas 4 to 5 months, market is volatile. So the option writers try to take benefit from it, and they set up different strategies for to gain the benefit of the time decay and the premium erosion over the period of time. So for the range bound market, at the start of the week, they can get into a short straddle or long butterfly where the premium are also high and they expecting the market is likely to be a range, so they can get the benefit of time decay and premium erosion. However, when you move towards the near of the expiry current series, where the option premium is very less, so in this case you have really not much to lose. Whereas when the premium is low, you can also bet upon on the momentum this thing. So instead at the near of the expiry of the current series, what we can do is we can get into a naked buying or naked selling if the view is positive. So if the view is positive, we'll suggest to buy a call option and to play that momentum on the upside. Whereas if the view is negative, so we can get into a bearish play out, that is a buy put option. And as per the market, if there's expecting a downfall, you can buy the put. Whereas if you're expecting a rise, you can buy a call option. So likewise, depending on the market setup, we can buy this thing. However, there are times when direction is not clear. So generally, this is the time, that is that from today onwards till next week, till budget, the volatility is likely to be higher, and there are chances the market might move both ways, on the upside or on the downside. So when there is a direction not clear, the traders or the short-term traders can get into a long straddle or strangle as per the risk appetite and how much premium they're ready to pay. And towards the later part of the expiry, they can get into the buying activity or naked buying on the call side or naked buying on the put side. And as per that, they can keep on swifting as per the market movement. So all in all, when there's this beginning of the series, it's always advisable to play through spreads. That is the different spreads, that is bull call spread or bear put spread or covered call or covered put. Whereas on the contrary, when when as we move towards the expiry, current expiry, so it's advisable to play through naked buying or naked selling if there is a momentum in the market, and if you are not clear with the range or on the upside or on the downside, can go with the long straddle and long strangle, in which either way is a big move can help you to benefit from the move on the positive side or on the negative side. So this a few pointers are very key for the option strategy for an option trader, whether it's from a buying perspective or a selling perspective or from a strategy perspective. What to do at the beginning of the series and what to do at the expiry of the series, which helps to understand which way to go through. Now, talking about the option, Nifty option setup. So as we already discussed, immediate Nifty support, Nifty is trading around 14,400 levels, and the immediate support seems to be 14,250. That is also the swing lows of the last week, that is 14,222. So 14,222 is likely to be seen as a key level. While on the upside, 14,500 and then 14,600 is likely to be an important level. So till the time it holds, a hold above 14,000 could deserve a further movement in the market ahead of budget. So 14,500 is likely to be a key level for the market. And as for the market setup, stock specific action is likely to be rise. Volatility on the contrary is also likely to be higher for the market, because ahead of budget, we already discussed the volatility likely to be higher. Whereas in terms of Bank Nifty major support is at 31,000, then 30,750. Whereas on the upside, 31,600, then major level is 32,000 zones. So over here, the hold below 31,600 could be a key thing. Whereas till the time it holds below 31,600 levels, the volatility is likely to be high, and it can inch lower towards 31,000 zones. In terms of option buyers, so generally such moves, it tends to be quite volatile for the option buyers, because the movement is quite swift, and it's very important to get into the right entry point. Otherwise, the stop loss level would won't work. So for the option buyer perspective, what you can talk about, till the time it holds below 14,450, 14,500, they can get into 14,350 put, and keeping stop loss of 15 to 20 points, they can play the downside move. However, it's also important to understand the volatility will be higher, so the option buying has to be quick entry and quick exit, and you just cannot hold it just waiting for it that it will fail further. So it's very important to keep that in mind for the option buyer. Whereas for the option seller perspective, what is important is the option writing. So generally during such times, it is advisable to be call heavy, that is sell more call writing as compared to sell put writing. So looking at the premium also, as premium is high, the option writers can go into pairs such as 14,900 call and 13,750 put at net inflow of 18 to 20 points. So they can get the benefit, because the broader range as per the market is likely to be 14,200 to 14,700 for the coming expiry. So they can take benefit from the writing activity, 14,900 to 13,750. This could be the bigger range for the option writing. However, the risk will be higher because the premium will not cool off easily because of the higher volatility. But keeping in mind, generally when the VIX is high, you can be higher side on the call side and comparatively put lower position on the put side. So the range important could be 14,200 to 14,700 going forward. So this was the action perspective for the index level for the option buyers and for option sellers. Now talking about the budget strategy. So everyone is eyeing on the budget and everyone is looking what to do for budget. So it's very important to understand how to play this budget thing. So if you see going forward also, last couple of years, the budget has been a key event for the market, and that generally sets the tone for the market going ahead. This time already ahead of the budget, market has already moved quite a lot ahead of the budget, and it's very important to see how do they play. So a lot of people have asked what should we do ahead of the budget. So generally what happens, no one can exactly say till what level the market will go, but whenever there is any uncertainty, it's always advisable to hedge your positions. So that means what? Whenever you have a portfolio or whenever you have open positions, it always better to hedge, because whenever there is a positive thing, market will generally gradually move higher. But if there is anything that market is not expecting and something negative side, so market tends to go lower, and the movement is quite swift. So during that point of time, it's not easily available to judge, but prior to that, it's always advisable to get into certain hedging strategies that will help for the clients to hedge their positions and manage their risk appropriately. So few strategies for the budget that we have suggested to our clients. First one is the Nifty Bear Put spread for the Feb series. So the budget is on 1st Feb, and it's always advisable to go with the monthly strategy. So in monthly strategy, you can wait for the entire movement, and there's no rush to exit the position due to the weekly movement. So the first thing that we have advised is the Nifty Bear Put spread for the Nifty Bear Put spread for the to play out the budget outcome, that is buying 14,400 put and selling 13,600 put. So this will be helpful for the this would be a net premium of around 250 to 260 points. So over here there is around a spread of difference of 800 points. So the max risk that would be 250 points. So if there is any uncertainty and market corrects, so the option the person who have get into this strategy, he'll take a benefit of 540 points, where the risk involved is 250 points. So as per the view, negative towards 13,600. So till the market corrects towards 13,600 levels, volatility could be high. But as per the option data, 800 points is the moment. So instead of naked buying, because naked buying, the premium will be higher, and you really don't know when the market will go down and can come up quickly. But for spreads, the best part is that you know your limited risk, what is the risk involved, and what is your maximum reward. So the best way to play through is getting the Bear Put spread, in which you can, such as we have already suggested, buying one put of 14,400 levels and selling 13,600 put levels at the net premium around 250 points. The benefit would be up to 13,600 levels. 500 max would be 540 points. And as per the option data, also we're expecting a move of around 400, 500 points on the either side. So if there is any downside, that helps too. So you can definitely play out through this. The second thing strategy that we are suggesting is the budget strategy, that is the Nifty call hedge. So if you see the Nifty call hedge Feb monthly series, instead of getting a strategy, there are also people who go for direct short the index futures. So in this case, what we can do is we can sell Nifty Feb future at 14,400 or 14,300 levels, and on this contract you can buy 14,500. So for in case the market corrects and market goes down, so we can make money in the Nifty future by as we have shorted the future. On the contrary, at the same time, we can buy. We have bought 14,500 call. So in case there is no negative outcome, and instead of going down, it has moved higher. So that could be a benefit for the market, and the maximum risk is 430 points. So if you see 14,400 minus 14,500, that is the 100 rupees hedge difference along with the 330. So the maximum risk is 430 points. Unlimited if the market corrects to the lower level. So it would be unlimited to the extent of downside move. So till the time market is below 14,400, 14,200, 14,100, that would be benefit for the trader and for the hedging it. So the over here, generally what happens, it's advisable to already initiate the position ahead of budget, because the premium will start rising, and as and when the premium start rising, you need to pay a higher amount for the same premium, and post the budget outcome, the premium generally tends to crash. So it's always advisable to get into a strategy a couple of days or couple at least a week prior to hedge the positions for the Feb series. So over here we have discussed about two strategies. That is the Nifty. First one is Nifty bear put spread, in which the risk is also limited, reward is also limited. However, the downside will be protected towards 13,600 levels, as we're expecting a movement of 600 or 700 points on the 400 or 500 points on the either side. And the second one, those who want to be a little bit aggressive and they want to hedge their current positions or hedge their portfolio, so they can sell short Nifty future, and at the same time they can buy Nifty call. So that would be, the investment would be 430 points. That is 330 is the difference, along with the 100 points difference for the future 14,400 to 14,500, and he can be benefit up to the extent of the downside move. So if even if Nifty corrects by 1,000 points or for 400 or 500 points, so he'll be in a benefit situation in the same. Going forward, if how to reduce, so if the market of, for example, if budget outcome really doesn't set any much movement on the either side, so you can definitely reduce the cost of the strategy after the event by additional put writing or call writing. So it's very important to see where what the market holds any current levels or no. If they're not holding it, definitely get into their writing activities and reduce the cost of the strategy. So the best part about the option strategy is that once you initiate the strategy, there are a lot of different various options in which you can benefit from it by setting up the contra positions. Also helps to reduce the cost of the strategy. So the risk is also involved is here minimum, and at the same time reward is also high. So it is a quite gainful setup. But only thing is important that you also need to know what is the direction and for what time frame you are choosing. So if you want to play like for the budget strategy, it's better to get into a Feb series rather than January series, because January it will expire on 20th January. But till Feb, as a post the budget outcome, the entire month will have to monitor and how to play it. That would be a win-win situation for the option strategies. Now moving on to the next thing, that is the important thing is the Nifty. Keep a few key things that will be we need to focus upon. Along with that, if anyone has any question, definitely will be along with the session we can talk about the questions that are there. So from the options buyer perspective, what is important is that buyer needs to focus on not to lose all the premium. So it is very important for the buyer, option buyer, if you get into a position. So for example, Nifty is trading around 14,400 and 14,300 put is trading around 80, 90 to 100 levels. And he is expecting that Nifty might correct by another 50, 70 or 100 points. So is my keep in mind that he'll keep a stop loss of 25 points. He bought it at 100, keeping stop loss 75 for a target towards 150. So he has that view. But in case there is a sharp up move, instead of going down, there is sharp up move, and the option premium is corrected from 100 to 50. And if he hadn't keep a stop loss of 75, he would have ended up losing 50 points. So for the buyer, it's very important. The entry is quick. The exit has to be quick. If that is not the case, it will be a very difficult case for an option buyer to make money. Quick entry, quick exit with strict stop loss is always advisable for the buyers, although the risk is limited up to the premium pay. But what is important is that the profitability or the ratio, he is able to manage it or no, that is also need to keep in mind. Then is the sellers. This is from the option buyer perspective. Then is the option seller perspective. What is the option sellers doing? So option seller did not need to focus on not to lose what he can't make from the position. So option seller is basically what they are, the premium eating players. So they expect the market is likely to be in a range, in a wider range, and because of the time decay, and as we all know, there's only one thing certain, that is the time, and the time factor will always play important for the options writers. So in fact, past couple of months has been quite painful for the option writers, because market has been quite trendy. So the like from the series of November to December to Jan, market has been moving one way, and for the option call option writers, they have been on the pain point because the market is continuously moving higher. So it's also important whenever there is a certain thing or certain level positions go out of thing, they should not make sure that the premium, if the stop loss is getting hit, it's important to execute, because in option selling the risk is unlimited, whereas in option buying, what is the best part is you can only up to the premium that you have paid, only that is the risk. But in option seller, for example, if you have sold Nifty 14,800 call option at 20 and market has moved higher and now the option is around 20, it has moved higher to 40. Okay, that's fine, because that is the double of the stop loss that you keep. But instead of keeping it, the option move up to 70, 80. So that is already 4x. So in this case, it would be very difficult for the option seller to make money. So what we have also learned in the market is it's important to make consistent profit rather to make one handsome profit. And it's all about market is all about discipline and consistency. So if you are stable, if you are disciplined, if you are consistent, that would be helpful for the option writers to make money. At the same time, for the option buyer, it's very important not to lose premium, and at the same time keeping strict stop losses, because and get into option buying or option buying perspective when there is momentum in the market. If there is no momentum in the market, it is generally advisable not to go for it, because that would be a pain point for the option seller also, option buyer also. Then we were discussing it requires a proper discipline with consistency, like predefine setup, strategy, and trade quantity. So we have already discussed about in derivatives, it's very important in derivatives, or whether it's technical, overall in market, it's very important to have a game plan, to have a strategy to what quantity you are trading with proper discipline and with consistency. So as if you have a proper game plan, proper strategy setup, and proper trade quantity, then it's up to the market also how do they reward it. But what is important generally we have seen is people tend to make profits, small profits, and lose out, whereas people keep on holding their loose positions. So what is important, like generally people book profits easily, whereas when there's the position is on negative side, they keep on holding on to it. So generally this is not the style of the person to make money in market. Is important to write the profit, whereas on the same time if the position is going against it, it's important to cut your losses fast, because if you don't cut your losses, that losses will keep on inching higher, and that will definitely make the entire setup in a different way, which will not be helpful for the trader or for the investor to make profit from it. Especially in option writing, that is a part of a derivatives thing. It's very important to follow strict discipline, because the risk involved is unlimited. So there are a couple of expiries where a bank nifty, a call option that has been right has moved up by 4x or 5x of the option, or on the put side, the option writing has moved up by 4x or 5x, from it has moved from 20 to 150 or 200 levels. So in such cases, it's always important to maintain the double the stop loss and exit the position. So whatever loss, try to book the loss first, and then try to see what can be done in alternative to make that loss reduce, and try to form a better strategy. So it's very important to have a game plan. What is the strategy? What is your view? What is the quantity? So this quantity is also a very important factor. So quantity depends upon how much risk you are ready to take on a particular index or particular stock or a particular type. So if the quantity is way higher, then and if the person is not able to manage it, even that would be a setback. Whereas if the quantity is way too lower, and the profit, the strategy is turned to his favor, still is not able to make more money because the quantity is really low. So the quantity has to be apt as per his risk appetite, as per his view, and also able to manage if something goes against the setup. The next point is the hedging is required and position has to face any volatility. So today the session is already more about the hedging, because there's a key event going ahead in the coming week, that is the budget, and it's very important to hedge your position. So as the market has already run up quite well in the past couple of months, so it's always advisable to hedge your portfolio. So hedging is like a premium that you pay. It's not necessary that you have to earn from it only, but it's like a premium cost that you pay for your portfolio or for your open positions. So for open positions, you can get into different strategies that we have already discussed, and for your portfolio also, you can keep buying nifty puts for the coming month. So any uncertainty or any downside move, it will help to protect to a certain extent. Hedging does not mean it will be totally protected or it will be fully protected, but it will definitely help to reduce your losses. And in market, there's also the saying, the person who can cut their losses and who can reduce their losses is a person who can make money. Because there are days when there are certain days that is totally unfavorable for you, but there are few days that is totally helpful for you. So when there are certain days that is unfavorable, it's better to keep your positions light and reduce your losses and follow strict stop losses. Whereas there are certain days when market is total momentum and there are positions or there are factors that totally works in your favor. So in that days, you should take the most of it. Then the next point, need to address or cut losses first. So this has been the most important thing for any trader or for an investor to do it. For trading perspective, it's more important because trading, generally what happens, people for example got into 10 trades, and it's just the first time the stock, he bought it at 100 and he sold it at 101, and like time he did for 10 out of 10 trades, he did for 9 times the same thing. Bought it at 100, sold it at 101, bought it at 100, sold it at 101. So he made a profit of 9 rupees out of 9 trades. How in 10th trade, instead of going up from 100 to 101, the stock went lower towards 90 levels, and the trader is still holding on to the position. In that case, the loss is 10 rupees, whereas he has earned 9 rupees from his previous 9 trade. However, the net loss to loss is 1 rupee because he has not been able to cut losses first, whereas on the gains perspective, he has exited quickly. So it's very important to reduce your losses or cut your losses first, and then try to see what else can be done. Because if the losses are not cut first, then they would be inching higher, and that would be a pain point for any trader or a market participant to manage it. Especially in derivative also, for option writing perspective, it's very important to cut your losses as your stop loss hits. Otherwise, the position will not be able to capture it. Then the last point is that follow or trail the trend rather than preempting it. So there's a thing of whether the market will go up or the whether will market will go down, or whether the market is stuck in a range. So it's always that dilemma is there, whether we should enter or not enter, whether we should try or we should not try. So it's very important to see what is the overall trend of the market and accordingly play with the direction. So if you see overall trend of the market for past couple of months, Nifty has been outperforming in that IT sector, auto sector, metal sector, pharma sector has been the front runners. Along with that, Bank Nifty has been performing, but it is performing the patches. Selective private banks has been the major driver for the Bank Nifty. Along with that, whenever we see a trend, so if we see there are certain sectors that are trending, so the IT sector or the metal or auto has been quite trending from past couple of weeks and from past couple of months. And in that case, instead of preempting, you can see the trend that it is making consistently higher highs, higher lows, and it is moving in a trend. So in that trend, it's very important to get into that trend and follow that trend rather than preempting it when you are in confusion. So if you see, Nifty has been quite trending for past 3 months, from 11,000 moved to 12,000, from 12,000 moved to 13,000, from 13,000 moved to 14,700. Now for past few days, market is a little bit witnessing few volatile move between 300-400 points, but till the time Nifty holds about 14,200 levels, the overall setup is still could be positive with volatility. However, it's very important to book your profits also, and at the same time keeping trail the stop losses also. However, instead of this, if we just preempt and we expect that market will correct and we just keep on buying the put positions, so that will also not help. It's always important to see what are the key heavy stocks that are doing that will help the index to go up or to go down. Along with that, as you already discussed, the option data that would be helpful for us to understand what with the broader range, and as per the range, anyone can play through it. So few things that we always need to keep in mind is, first is the buyer need to focus on all, not to lose all the premium. That is a key thing that is very important. Second, sellers need to focus on not to lose what he can make from the position. That is also a very important thing. So continuously sellers should follow strict stop losses as the risk is unlimited for the seller. Then requires a third point, that is requires a proper discipline with consistency, like predefine a strategy with the trade quantity and riding the profit. So this is a very key point where in which we require proper discipline with a proper game plan, and proper trade quantity is required for the end client. Along with that, we can play the move. Fourth, that requires is the when hedging is required. So we are also advising all the clients current in the market to hedge their portfolio. So in any uncertainty or something, that would be like a premium cost that you have paid. So we have also discussed about the budget strategy. So in hedging thing also, what is required is take it as a premium that you have paid to take against your portfolio. So not necessary that you will earn from it, but definitely it will be kind of a cost that will help you to certainly reduce your losses and not to cut your positions in panic. So this will definitely help for you overall to face any volatility, and definitely going forward for coming few days, volatility is likely to be higher ahead of budget, and market is likely to swing both ways. So it's always advisable to hedge it. uh, then we have already discussed about need to cut your losses first. So this is the key thing in order to be successful and in order to be stay in the market. We also realize in the market a lot of players do come and a lot of participants do come, but they're not able to follow their strict process, because they keep on holding the loss position and keep on losing out their winning position. So it's very important that the people, those who have survived in the market, they have understand, they have reduced their losses, they have cut their losses, keeping the emotions attached, and as per the market setup, they have moved into the positive side or on the negative side, as and when the market moves on the either ways. And last, we already discussed follow trail the trend rather than preempting it. So this is the very key thing that we discuss. Whenever the market is making continuously moving higher or continuously moving lower, it's always important to understand what is the next move, and accordingly a specific stop loss or specific key level that could be decided, that will help you to reduce your positions accordingly. So we have so far discussed about the key things that is there from a option seller, option buyer perspective. Along with that, we also discussed about budget strategy. So just a little bit, I'd like to touch upon a little bit more about the strategies that we have to use. So currently going forward for the budget also, we have already discussed two strategies. Few more things we'd like to touch upon is that as market is likely to be on a wider range on the both side, instead of naked buying, naked selling, it's advisable to go into spreads. And there are also strategies in which you expect a wide movement. So if you expect a wide movement of 300 or 400 points on the other side, you can get to a strategy. Whereas if you expect that market is likely to be in a wider range, so even you can get into a short triangle, but for short triangle, the premiums be high and the risk would also be high. So that also needs to keep in mind while doing while going forward for that. So different strategies help to provide different outcome, and only best part about the strategy is like it covers all the different segment, whether it's on the positive side or on the negative side, or on the range bound or on the volatile side. So all the four setups that would be easily covered by the option strategies. And the best part about is that we know what is the risk that we have involved in it. If the risk is very high, we'll try to exit the position. If the risk is limited, we can already stay in the position, and along with that, try to reduce the cost of it. So the best part of option strategies is that we can take the benefit of all the moves, and take for any event or anything, we can definitely set into different setups, and that would be helpful for the option traders to get into different strategies. We have already discussed about the action point, that is currently the key levels for Nifty, for key levels for Bank Nifty, and you can get into a Nifty put looking at the setup. Along with that, for the option writers, 14,900 and 13,750 put we can get into for writing activities. The budget strategy we have discussed about Nifty call and Nifty put, and just the last few minutes before any queries, that is the key points that need to keep in. And this, the person who he follows a strict game plan and strict stop loss policy, definitely will be able to make consistent profit going ahead, irrespective whether the market. And it's very important to follow strict discipline. And there are chances, like there are people, or we have interacted in the past also, people say that I have been holding the stock at 400, now it's already 10% down. So, but there was a stop loss for it. So people who does not able to cut the position losses generally tends to suffer more losses, whereas the person who is able to cut the position losses generally trying to move higher going forward. So in options derivative segment particularly, it is all about strict discipline and maintaining a strict policy. And all in all, what advice we can give to the traders is like always keep your position hedge whenever there is uncertainty, and whenever there is certain thing going out of your position, better to reduce your positions or manage it buying a put option or a call option if the view is going against yours. So it's very important to follow a strict game plan and reduce the losses and follow a proper trending thing. If certain thing is not working, there are days when certain things is not working. So better keep your positions light and do hedge going forward. So with this, we would like to conclude the session for today. I hope you guys like the session and enjoy the session. Going forward, we'll keep on keeping many more sessions on the particular different topics that we'll able to guide you for the same, and definitely looking forward to conduct many more sessions. So thank you guys. Thank you all.